So it's that day again when the non-farm payrolls is released. And welcome to the live coverage of the non-farm payrolls by Dirty Economics. And this is Omkar here, and I'll be going through the action in the markets live on the non-farm payrolls release. And it's just 5 minutes to go now. And as you can see on the chart on the screen, I have pound yen chart, and the fate of the collective rally in pound pretty much depends on the payrolls now. Uh, if we have a horribly weak number the way we had last month, I guess in that case, I guess we could maybe go higher to 1.3119. Otherwise, if it's a super strong data, it's a big NFP number along with a very strong payrolls figure, wage growth figures as well, then I guess pound go would go down. It would resume its weakness again. But as long as it doesn't dip below 1.2789 levels, there is always a scope for a correction. Simply because on the 4-hour chart, let's just on the 4-hour charts, there's a bullish price RSI divergence, and that should help pound. This is the bullish RSI divergence that we have got here. I'm just waiting right now. The other thing that we could have a look at is gold. It's trying to break out from the falling channel that we have on the hourly chart. So it's all data dependent now. We'll just wait 3 minutes to go. The first thing, as trader, first thing that I would look at is the reaction in the 10-year treasury yield, or the treasury yields in the US. And for that, let's just be ready with screen. And in investing.com, we have a good option to just check out the action in the bond section. The first kind of a proper reaction proper reaction in the market would be in the treasury yields. As of now, the 10-year yield is around 1.39, and the record low stands at 1.322%. It was hit earlier this week. The 2-year yield is at around 0.609%. It's up 2 basis points. And the 30-year yield is at 2.14. It's largely unchanged on the day. As the headline goes over here, if you see, crude prices are off 2-month lows. Well, let's just switch to TweetDeck. Low volume spike in gold is what Forex Live is saying right now. And let's just look. Yeah, it was a kind of a low volume spike. Maybe it went up to $13.64 and has come down. This is not surprising ahead of a major data release like non-farm payrolls. It's now around 1357, and it's trading below hourly 50 MA as well as hourly 100 MA. And strong data, if we have a strong data, I guess we go down to hourly. It's maybe hourly 200 MA seen right now around 1342, 1341 levels. And let's just switch back to TweetDeck. If we have any last minute activity, nothing as of now other than gold. We just saw a low volume spike, as Forex Live guys are saying. We'll just wait now, just 1 minute to go around before we get the data. It's almost there now. It's almost there. Mind you, the Fed markets do not expect Fed to raise rates this year, neither in February 2017. And actually, calls for rate cuts have gone up, and so even a slight miss on the wage growth figure would be enough to strengthen the calls for policy easing. Here we have, this is a big number. This is a super strong number. It's 265K versus 180K, and that is likely to push 10-year yield soaring above. We have 10-year yield at 1.44. It was trading at around 1.39, and then you have the 2-year yield. 2-year yield always represents, either it represents the short-term interest rate expectations or inflation expectations. And a sharp rise in 2-year yield, it now trades 5.6 basis points higher on the day. So gold, as I said, just 1 minute back, as I said, if you have a strong number, gold would go down to hourly 200 MA, and indeed it has. It's a sharp drop, and from here, we have a support around 1329 levels right now, and it's the expanding channel resistance on the charts. Let's just see what's happening in currency space. Pound would look scary now. Somehow it has managed to hold about 1.29 levels. That's a good news for people who are expecting a correction in pound. And euro has gone down. It's almost at 1.10, and it's not surprising. We had a bearish daily closing yesterday at 1.1066, below 1.1066, which is a 50% Fibonacci level of move from 1.0517 to 1.1616. And expect the weak trend to continue over the next week, especially in euro, because it's seriously, on one hand, it's seriously overbought against pound, and if the technical correction in pound continues, euro GBP would come down, and that should add to the bearish pressure on euro dollar. Plus, now we have a super strong payrolls figure, so that makes life even more difficult for euro dollar bulls. And let's just check other details on the tweet deck. If we so let's just 2-month payroll net revision now stands at 6K. And the previous was around minus 59K. Well, let's just try to have a look at the details. The devil usually lies in details. We have the change in non-farm payrolls at 287K. Oh boy, but the last month's number was revised even lower. It was 36K, and it is revised down to 11K. And the same goes for private payrolls, downward revision, but a stellar current month figure. So maybe that would overpower the previous month's downward revision. Participation rate ticks back up. It's gone up to 62.7 from 62.6. So that's a sort of a good news as well. You have average early earnings up 0.1%, which is just a touch soft. Forecast was 0.2%, and now at 2.6% year on year. So on wage growth front, it is not really a good data, but payrolls figure is stellar. It's the highest since October, and it's smashing expectations all across the board. So that should support the US dollar. However, interesting thing to see here right now is whether this will have any material impact on the Fed rate hike bets, because markets don't think that, especially after Brexit, things have changed. Political uncertainty is huge now across Europe, and then you have elections in the US as well. So data alone is unlikely to convince markets that Fed would move rates. So I suppose if we go to CME website here and just check out the reaction in the rate hike probability. Uh, that markets still don't see any possibility of a rate hike in July. Obviously, there's no chance. No probability of rate hike in September either. 2nd November, still the same story. Still the same story, pretty much same story. We have this 14th June meeting, and till June 2017, markets do not see a possibility of rate hike. So as I said, this data, the headline figure is really good, but markets don't think the rate hike would happen in 2016 or even in 2017. This is the AUD USD chart we have, and it has a symmetrical triangle on the hourly chart. We had a temporary break below the symmetrical triangle support, but the bird has quickly recovered, and now, if it moves above the resistance level, I guess that would be a good good time to good time for the bulls to jump in. It could go to 7571 levels. GBP USD is hovering around 1.29, 30, 35. You have euro dollar around 1.1019. And let's just check another important pair, USD JPY. It has recovered to 100.87. It clocked a high of 101.28. So as long as it stays above 100.71, which is 50% Fibonacci level of the larger uptrend from 2011 low to 2015 high, as long as it stays above this level 100.71, I think there's a scope for a recovery. In any case, the daily close, if it happens below 100.19, that is Wednesday's low, I think then we would head back to the Brexit day low of 98.77. Let's just check the action on the Twitter if we have any important. Dollar rallies after the huge move higher in NFP. Sure, dollar rallied, but I guess the move was kind of short-lived. It's trimming gains now, and that may be due to the fact that the previous month's number was revised even lower, and the current month wage growth numbers have been a touch soft. So that takes the punch out of the stellar non-farm payrolls figure. In pound, just hovering around 1.2930s, 2920s. And you have dollar yen at 100.86. Let's just look at gold, what's happening over there. And on the hourly chart, let's come back to the hourly chart. So the falling channel is pretty much intact, and we just have to wait for the day, the breakout now, on gold. As of now, there's no clear trading signal. When viewed on the daily chart, it looks like this is just a correction. As long as prices don't fall below, say 1307 levels, there's little reason to worry. You can always go long on dips, but as of now, it's just waiting for the breakout from the falling channel. Note the early RSI has dipped into oversold territory, so we could snap back from here. And just coming back to let's go to the bond markets again. Back to the bond markets. And the 2-year treasury yield has trimmed gains. It was up about 6 basis points, and it's now up about 4 basis points. So no wonder the dollar spiked, but since then has not been able to really capitalize on the initial jump. You have the 10-year yield at 1.413. Now, if you are a believer of harmonics, yesterday a TradingView account had posted a bearish cipher setup for 10-year treasury yield, and as per the harmonic pattern, the yield was expected to go up to 1.499% and then turn lower. That is at point D, which as per cipher formation is a reversal zone. So, however, despite the stellar number, the high is just 1.434. So yield hasn't even neared 1.499%. So whatever spike we just saw in the US dollar, I guess it could be short-lived, and I'm not saying that dollar will be sold off heavily, but yields are not reacting as they should have, and the message is quite clear that the number isn't number is good. The headline number is good, but as I said earlier, the miss on the average early earnings hasn't gone down well with the markets. And now here we have a 30-year yield just 1.6 basis points higher, a 10-year yield just 3 basis points higher, and 2-year yield is still around 5 basis points, but it's looking really, it's not really supporting the dollar. 10-year yield, the potential reversal zone stands at 1.499%, and the yield didn't even near the reversal zone. So that pretty much explains the thing. As I said, the spike in the dollar is short-lived, and that is why we have gold back at $13.48. The low was $13.34, so it's around $14 off the low. Also keep an eye on the next hourly candle. If it sees a positive close, we're going to have a bullish price RSI divergence on the hourly chart, and if such a formation is followed by a bullish break from the falling channel, then it would be a sign. It would suggest that fresh rally has resumed, and prices could go up to again around $13.70, $13.78 levels. Major levels on gold. Major levels on gold are, the first one is obviously $13.80. It's a 38.2% Fibonacci level of more clear on monthly. It's a 38.2% Fibonacci level of 2011 high and 2015 low. It's interesting that both gold and yen are moving hand in hand since 2011. Gold topped out in 2011. Yen topped out in 2011 against dollar. Gold bottomed out in 2015, and dollar yen has topped out. That is, yen has bottomed out in 2015 as well. So it's an important point to note. On the downside, the immediate support comes on 13.23. It's a strong support. It's a monthly 50 moving average, and a breach of which would expose $1300 levels. And then the next support comes around $12.77 and $12.63 levels. So that's on gold. And dollar yen is up around 101 now, and it's really showing signs that correction could gather steam from here, especially if the daily closing today is in the positive territory, anywhere above 100, 120, 100, 130. That would be an indication that the retreat from the post-Brexit high has ended, and we could be heading back to 103.40 levels again. Pound yen again around 1.29, 30, 35 isn't doing much, and Aussie is actually scaling new heights now, and a bullish break from the symmetrical triangle, as I said, would expose the next Fibo resistance at 7571 and 7597, and that would be a good move. A bullish break from symmetrical triangle on hourly chart would expose the higher end of the symmetrical triangle, or the seen on the daily chart, and that comes around 0.7606. Let's see if the Aussie is able to score a bullish break. I guess it would, and it's pretty much done deal. Another 15 minutes to go before the hourly candle closes, and if it's above the resistance, we are going higher to 0.7606. Again, elsewhere, if we just have a look elsewhere, the 2-year yield is back above 0.64. It's up 5 basis points again. A 10-year yield is at 1.422%. It could go to 1.499% as I talked about, and that should give another lift to USD JPY. So, assuming that the yields continue to move higher, let's say on Monday it goes to around 1.499%. Dollar yen could go to around 101.80 levels. US S&P futures are up 0.75%. It's sort of a buy. It's a sort of a mess that when you have a strong jobs data, markets react positively, because a strong data means the US economy is still a bright spot. And when you have a weak data, it means the Fed would not raise rates and still equities rally. So it's sort of a rally situation. As of now, futures are up 0.75%, S&P 500 futures. And oil is up 1% as well. So we are set for another good day on the Wall Street. The Aussie is failing to sustain above the symmetrical triangle resistance, and KV dollar, it's having a go at Brexit high of 7298. Dollar yen is back below 101, struggling to extend above 101 levels. Euro dollar hovering around 1.1020. As I said, if the pair looks set to breach 1.10 and fall down to 1.1093 levels or so next week. More so if the cable correction gathers steam next week. Gold down 1%, silver down 1.57%, and coming back to treasury yields, the 2-year is up almost 5.6 basis points now. 5-year yield up 6 basis points. 10-year yield 4 basis points. So if we just look at the 2-year yield and 10-year yield, it's a flattening of the curve after positive data. That's a good news for US dollar. So that's it for today. I hope you guys enjoyed, and if you have any questions, suggestions, please tweet us on our Twitter handle, or comment in the YouTube comment section. Thank you. Have a great weekend.